Okay, welcome back. Now, IT services major Accenture reported a strong fourth quarter results for the year, and the company has of course also raised its guidance to 3 to 6% for the full year, while also announcing a buyback. We have Manik Taneja now joining us, Executive Director at IT Services and Internet at Access Capital. Manik, good to have you with us here. Just your first thoughts on implications for IT services companies in India?
Good morning, Prashant. The way I would read Accenture's results and commentary is that there's always a mixed read-through. So Accenture has provided for a formal outlook for the subsequent 12 months, which is about a 3 to 6% growth. But that includes a higher inorganic contribution compared to the prior years. So typically in their guidance, they typically incorporate about 200 to 250 bips kind of an inorganic component. This time around, it's about 300 odd bips. The second bit that I would say is that managed services, which is the real comparable for Indian IT, over there, Accenture's, at least with the way Accenture is guiding, they're not baking in a significant acceleration and growth. And finally, I would say Accenture CEO was very categorical in terms of saying that they are not seeing a lot of improvement and it's more of the same. With regards to Indian IT, what we've seen is that the markets have been extremely excited about the rate, about what I call as rate of change and macro-led improvement. I think Accenture's guidance is more of continuation of the current backdrop, and thereby some of that excitement needs to come off.
Hi Manik, good morning and good to see you. And Manik, the broad read-through that you're getting, post Accenture's numbers as well, and what consensus on the street is factoring in is that green shoots start to occur in the second half of this fiscal, and then we get back to growing ways in FY26. Would you concur, and how would you approach it? It seems that there is higher amount of preference now for tier 1 in comparison to tier 2 companies, because competency is going up. Things could get a little bit iffy for the mid-sized companies. Would you be in that camp? Or would you say the mid-sized companies anyway will grow much more, so you'd rather go with them?
So the law of basis essentially favors tier 2 companies, and at least from a valuation or from a stock price action standpoint, it is tier 2 companies which have been outperforming the large caps for a considerable amount of time. Even though when you look at numbers, there is a mixed trend here. So from a growth standpoint, tier 2 companies have been outgrowing the larger ones, but in the near term, they are essentially contending with some pressure on margins, and thereby the earnings growth for tier 2 companies is trailing revenue growth, at least for the foreseeable future. Now, with regards to your point about is there a material acceleration in second half, the way I would say is that even if you look at Accenture's guidance, for the quarter gone by, they had guided for about a 2 to 6% growth. They ended up delivering about a 5% YOY CC local currency growth. And for the subsequent quarter as well, they are talking about an unchanged trajectory, which is once again 2 to 6% year-on-year local currency growth. So at least Accenture's guidance is not talking about a material acceleration in terms of growth trajectory. Within the mix, consulting piece is something which is beginning to get back into the positive territory for them, while managed services, which is where you should probably be focusing on, over there, they are not talking about any significant change in the trajectory.
Okay, so you're saying that there's no need to perhaps run away with joy looking at the read-through from Accenture. Though, of course, incrementally, they're making the right sounds and noises. But I get it. It's probably good to temper the enthusiasm a little bit. So, Manik, that brings us back to the drawing board. IT stocks have got a lot of tactical allocation in the last 3 months since the first quarter numbers. Because of a very obvious tactical portfolio churn, there's money that's moved back to IT, which is why the second quarter, I think, performance and the commentary going into the second half becomes extremely important, because earnings need to match the money flow. Do you think that will happen?
So at the very outset, I would say that at least from our channel checks, we are not picking up any significant signs of runaway growth into second half. That being said, there will still be some tactical factors. Think about the way currencies have been moving, especially GBP and Euro, and they will provide some support, some tailwinds to the reported USD revenue growth, and which is what people like us essentially publish, and thereby dollar growth numbers certainly will get upgraded for the sector as a whole. But is there a significant improvement across industry segments? I would say the answer is no.
All right, Manik, good conversation. Thank you very much for that quick perspective on the IT services space on the back of the numbers last night from Accenture.